Hello and welcome to episode 8 of The Investor's Chair, where we delve into what every founder should know when it comes to securing investment. I'm your host, Alex Morgan, and you're listening to Boardroom Visionaries. Today, we're going to take a deep dive into the world of investors and provide valuable insights for founders seeking funding. So, whether you're just starting out or looking to scale your business, this episode is perfect for you. Let's get started. So, you're probably wondering what the investor sitting across from you is really like. Let's take a closer look. First off, it's important to remember that investors are just people, not scary money monsters. Most of them are genuinely excited about finding great founders with innovative ideas. They've probably been in your shoes at some point, trying to get their own business off the ground. So, don't be intimidated. They want to see you succeed. One thing to keep in mind is that investors are looking for more than just a good idea. They want to invest in founders they believe in and trust. That means being authentic and transparent about your vision and the challenges you might face along the way. Show them that you're not just in it for the money, but that you're passionate about making your idea a reality. When you meet with an investor, it's also important to be prepared. Have a clear understanding of your business model, market potential, and how their investment can help you achieve your goals. Show them that you've done your homework and you're serious about turning your idea into a successful venture. One last thing to remember. Investors want to see potential, but they also want to see momentum. So if you're able to demonstrate that you've already made some progress and have a solid plan for the future, you'll be in a much stronger position to secure their backing. Ultimately, meeting an investor is an opportunity to build a relationship, not just secure funding. So be yourself, be prepared, and be ready to show them why you're the founder they should bet on. Okay, so you've got your big idea, you've done the groundwork, and now it's time to pitch it to potential investors. This is where the art of the pitch comes in. First off, you need to be crystal clear about what your business does and why it's going to revolutionize the market. Keep it simple, compelling, and easy to understand. Investors don't have time for confusion. Next, you need to show them the potential for growth. Paint a picture of your business scaling up, dominating the market, and bringing in those big returns they're looking for. Be confident, but realistic. They know you're aiming for the stars, but they also want to see that you've thought through the practicalities. And speaking of practicalities, you'll need to demonstrate a deep understanding of your industry and your competition. Investors want to see that you've done your homework and that you know what sets your business apart. Show them you've got a clear strategy for carving out your piece of the pie. Finally, make sure you convey your passion for your business. Investors are backing you as much as they're backing your idea, so show them that you're committed, confident, and ready to take on whatever challenges come your way. So there you have it, the art of the pitch. Remember, practice makes perfect, so work on your delivery until you could do it in your sleep. Good luck out there. So, you've got your startup and you're thinking about seeking investment. Congratulations. It's an exciting time, but it can also be a bit overwhelming, right? One key thing you need to wrap your head around is valuations. I mean, how do you even begin to figure out what your company is worth, right? Well, let's break it down. First off, there's the pre-money valuation. This is basically the value of your company before any outside investment or funding comes in. Then, once you receive those funds, you've got the post-money valuation. This is simply your pre-money valuation plus the investment amount. Next, let's talk about how valuations are determined. It's usually a mix of art and science, but a big factor is your company's potential for growth and profitability. Investors will also look at the market landscape, your revenue projections, and the general health of your industry. And don't forget about dilution. When you bring in outside investment, you're giving up a piece of your company. that means your ownership stake gets diluted. But hey, it's a give and take. You're getting capital to grow, but you're also sharing the pie. One last thing to keep in mind is that valuations can vary wildly across different industries and at different stages of a company's growth. So, where does that leave you? Well, it's all about doing your homework, understanding your worth, and finding the right investors who believe in your vision and who can help take your business to new heights. All right, hope that gives you a better grasp on valuations. Stay tuned because we've got more key insights coming up in the next segment. So here's the thing. Great ideas get turned down all the time, and it can be really frustrating for founders. But let me let you in on a little secret. It's not always about the idea itself. Sometimes it's all about the timing. You might have a fantastic concept, but if the market isn't ready for it, you might find yourself facing rejection. Investors are also looking for more than just a brilliant idea. They want to see a solid business plan, a strong team, and evidence of market demand. If you can't demonstrate these things, even the best idea in the world might not get the support it deserves. Another reason why great ideas get turned down is competition. If an investor sees that there are already several similar products or services in the market, they might be hesitant to get on board. You have to show them why your idea is different and why it has the potential to stand out. And then, there's the issue of scalability. Investors want to see that your idea has the potential to grow and be profitable in the long run. If they don't see that, they might pass on the opportunity. So while it can be disheartening to face rejection, understanding these reasons can help you refine your approach and come back stronger next time. Keep grinding, keep refining, and keep hustling. Your great idea might just find the right investor at the right time. Hey there. So we've touched on some incredible insight about what it takes to impress the investors and secure that funding for your startup. Now let's delve into some common mistakes that founders often make when pitching their ideas. One of the big ones is not having a clear understanding of their target market. It's vital to be crystal clear about who your product is for and how it solves their problems. Another misstep is failing to articulate a strong and unique value proposition. Investors want to see that you understand what sets your product apart from the competition. Lastly, many founders make the mistake of not being prepared to answer tough questions from potential investors. It's all about being ready to demonstrate your deep understanding of your business and industry. These are just a few of the common missteps to be aware of. So, take note, and let's work on avoiding these pitfalls as you continue to navigate the exciting world of entrepreneurship. All right, so we talked about the importance of a great idea in the eyes of investors. Now let's dig a little deeper into what they look for beyond just the idea itself. Sure, having a brilliant concept is a great starting point, but investors want to see a lot more before committing their funds to a startup. They want to see a strong and capable team driving the business forward. This means they're not just investing in a product or service, but in the people behind it. They want to see passion, expertise, and a solid track record. Investors also look at the market potential. Is there a clear demand for the product or service? What's the competitive landscape like? And finally, investors seek a clear and realistic business plan that outlines a path to profitability. So while your idea is crucial, investors are also looking for a winning team, market potential, and a solid business plan. It's not just about the idea, it's about the entire package. First up, we have a question from Sarah in San Francisco. She asks, what's the one piece of advice you'd give to founders when they're seeking investment? That's a great question, Sarah. My top advice for founders seeking investment is to really focus on building strong relationships. Whether it's with potential investors, mentors, or advisors, building genuine connections can make a world of difference in the fundraising process. It's not just about pitching your idea, it's about showing that you're someone investors want to work with in the long run. So Sarah, don't underestimate the power of building those relationships. Next, we have a question from John in New York. He's wondering, what are the red flags that founders should watch out for when considering an investor? Excellent question, John. One big red flag would be if an investor doesn't seem genuinely interested in your company or your vision. If they're more focused on their own agenda or seem disengaged during conversations, that's a clear sign that they might not be the right fit for you. Another red flag is when an investor tries to rush you into a deal without giving you the time to thoroughly evaluate the terms and implications. Remember, it's not just about getting the funding, it's about finding the right partner who believes in your vision. Thanks for your question, John. Keep those thoughtful inquiries coming. So there you have it, folks. Everything you need to know about what investors are looking for and how you, as a founder, can position yourself for success. Remember to do your homework and be prepared for those tough questions. Show investors that you not only have a great idea, but also the ability to execute it successfully. Don't forget to stay true to your vision and remain confident in your abilities. The right investors will recognize your potential and be excited to join forces with you on the journey to success. Thanks for tuning in to this episode of The Investor's Chair. We hope you found it insightful and valuable. Remember to subscribe for more great content and leave us a review if you enjoyed the show. Until next time, this is your name signing off. Keep hustling, and we'll catch you on the next episode.